Buying a private business as an investment. In this video, I'll be talking about why buying an existing private business could be an excellent investment for your overall investment strategy. Now, of course, if you're an investor, you are looking at all of these different type of investment classes or in this investment products that you could put your money in to generate a return. And of course, every single investment has a different type of outcome that you want it to achieve. So you could be looking into property, you could be looking into stocks and shares, you could be looking into buying gold or other commodities, or you could be looking at buying a private business. So what type of investment is a private business? A private business investment is more about cash flow on a monthly, quarterly, half-yearly, yearly basis that you want to be achieving from that. Now, a stock and share, for example, gives a very small dividend. It can have some capital appreciation if you make the right pick, or if you invest in an index, of course, then we know that over time it performs and it does grow. If you're buying property, it's more about capital appreciation with a yield on your investment through cash flow on a monthly basis. And if you're buying gold, normally it's about capital appreciation. You don't get any return on your investment through cash flow. With business, however, it's primarily about cash flow. You very rarely get capital appreciation on a particular private business acquisition. So when you buy one business acquisition, unless you've got a great manager in there whose main job, and by the way, it's quite easy. Like, for example, you hire someone and you tell them, right, your task is to grow the value of the business, and you put those metrics in there. You need to know what those metrics are. Ultimately, it's about generating more cash flow. So ultimately, with private business acquisitions, it's all about cash flow. Everything's always pegged around cash flow. So let's take a look at a property. A property is a very stable investment. You buy the property and it goes up in value over the course of time, depending on the area and the economics around the local area. And it also gives you cash flow over the month. Now, the amount of yield that can normally generate is between anything from sort of 3 to normally about 7%, 8% if you're lucky. And in very rare cases, if you're getting great deals as well, up to 10%, but that's rare. I have seen some property investors achieve that, but it's not the normal case. So anything from 3% up to 7% is what you can achieve in terms of cash flow from a property. So that means if you put in 100,000 into a property, you can generate about 7,000 in cash flow over the year of that investment. With businesses, however, and let's take the same example, 100,000, right? If you bought a business for 100,000, that same business is going to generate you anything from 20,000 to about 50,000 in profit per year. It all depends on the negotiation of that business, and actually in very rare cases you can actually achieve more than that, but generally speaking it can be anything from 20,000 up to 50,000. Now, really and truly, for £100,000 investment, you probably want to achieve between 35 and 50,000 per year. Now you can see the difference. So if you buy a property, you're generating 7,000 per year in cash flow. That's if you're getting a 7% return, by the way, from your property investment. But if you buy a business for 100,000, then you will generate anything from 20 up to 50,000, and generally you can achieve between 35 and 50,000. Now, do I recommend buying a £100,000 business? No. Or $100,000 business? No, because normally that business is going to be too small. What you might want to do is you might have to pull together capital from other people, for example, or if you've got the capital yourself, you want to be buying a business which is generating at least 200 to 250,000 pounds or dollars in profit per annum. And the reason for that is, at the very least, 120,000 per annum, right? But generally speaking, 200 to 250,000. And the reason for that is that a business which is generating between 200 and 250,000 in profit per annum is generally doing above $1 million in revenue. And a business which is doing above $1 million in revenue has broken that £1 million mark, has broken that $1 million mark, and it's proven that it's got some worth in the marketplace. It's still not a big business, it's still not even a medium business, it's still not even on the high end of a small business, but it's proven its worth in the marketplace, and customers trust that business. So that business can generate you £200,000, $200,000. Generally speaking, you can achieve in terms of a percentage return of yield, cash flow I'm talking about, is between 20 and 50% per annum. That's the normal. This is normal, by the way. 20 to 50% per annum. If you're buying a big business, high quality business, then you're going to be around the 20% per annum yield. If you're buying a slightly smaller business, then it's going to be around about 50%. Me personally, when I'm buying businesses, I'm achieving anything from 35 to 50% return on my investment per annum. That's between 35 and 50% return per annum on my investment that I make. And that is easily achievable. If you know the right metrics, you know exactly what you're doing, what to look for, and what pitfalls to avoid, then you can achieve that 35 to 50% return on investment, which means if you invest 1 million, you'll be able to get your million back within 2 to 3 years. Even less than that, 2 to 2.5 years, you'll be able to get your money back. So that's a great investment class, and it's all about cash flow. Cash flow coming in all the time. Now, do you want to draw everything from the business? Again, because it's a private business, it works slightly different from a property. Even with a property, you want to keep some working capital for maintenance and repairs for a property. That's if you've got residential property. If you've got commercial property, normally it's a FRI lease, and therefore you don't need to worry about that. But with business, you want to have working capital and working capital growth. So that's fine. Even if you're buying a business in which you normally would achieve about a 50% return on investment, or even a 35%, let's say my average is 30, like low outside on the average is 35%. Even if you want to allocate 10% of that cash flow for working capital growth, you are still be able to achieve 25% per annum cash flow, which is by far much more than any other type of investment that you can make for cash flow, right? Unless you're running a business yourself and you're one of the main people who's running it. I'm talking about buying a business which is being run by someone else, right? So you are an owner investor. So that's the type of returns that you can achieve. So buying a private business is definitely an investment class that you should be looking at, and you should try to buy in the areas of your competence, because the more you can understand with businesses, it's like value investing, right? You need to understand the type of investment that you're making or what type of vehicle you're making it in. So if you understand the industry, you understand the business, and you don't need to be an expert. You don't need to be like the best person in the industry. You just need to be able to understand the business itself, what's its competitive advantage, and what type of customers it's serving. Has it got a good product or a good service? It's very easy. If you're a consumer of a product, or if you're a consumer of an industry, you will know those metrics just by being a consumer, right? You just might need to think a little bit more critically about your industry that you're being a consumer in, but it's very easy because you're already consuming in that. Or if you're interested in a particular type of industry because you're interested in a hobby or a product or a service, then you're automatically going to be able to really understand that. So as long as you stay within your circle of competence, you will be able to make an investment by a great private business that can return you cash flow month in, month out on a very, very high rate of return. So if you want to find out more about that, then with this one, this is probably one of the first videos that I'm making on this topic, but I will be making more. So probably by the time you're watching this video, there'll be more and more videos on the channel about why you can buy a private business as a good investment within your general portfolio of investments. So watch out for more videos on the channel.